only on Bloomberg Quint. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Independent market expert Dharmesh and Shahina Mukadam join us on the show. Thank you for both our guests for joining me on the show. Today on Hot Money, we'll discuss stocks like BEML, Tata Motors, Bosch and VMart. Now, the first stock that we want to discuss is BEML. One of the big movers yesterday surged over close to 10 to 15%. Post, the government said that it's looking to sell 26% stake in the company. The reaction was extremely sharp. It came off the highs of the day and is trading with a negative bias today. So the big question that you'll be asking our guest is that the counter managed to surge yesterday. It's down in trade. But because of this move, can the traction continue on BEML? We'll ask our guest. So Dharmesh, you have 1 minute, your opening statement on this. Do you think the traction will continue on BEML?
Yeah, likely so. Because what was lacking in all the, mini Ratras and Namratras companies of the government is the aggressive management. So this move by the government of 26% stake sale is very good for the company because it has all the facilities, capability, talent pool, everything in place. So what it lacks was the competitive edge because the very nature of government companies is they don't do business for profits. They do business to supplying or cater to the government needs. So I think this move is very much in line and it was much desired for companies like BEML to excel.
Okay, so that's the view. Dharmesh does believe that the traction can continue. Shahina, your opening statement, do you believe that traction can continue on BEML?
See, I think the numbers have been very sluggish. So if you looked at pure numbers, it looks like the stock is going to go nowhere. But now with the government stepping in and saying that it is likely to be privatized to some extent, if the government holds 54% with offloading 26%, a large part will be with the private investors. I think that's a positive given the fact that it is into the defense space where I think the government policies are very positive for domestic manufacture.
Okay, so that's the view. I think both our guests do believe that there could be traction on BEML. Now, to open up the discussion, Dharmesh, the point is here 26% will be more of a strategic sale. No private company will have total control. In a company which is not, with, as Shahina pointed out, the numbers have been absolutely sluggish. There's no clarity. Why will someone take stake, only a 26% stake as a strategic stake and not get the entire amount? Why will it make sense for a private player to get in?
See, to my mind, this is just the beginning of divestment process. You cannot go full all out entire stake sale because the nature of business BEML does is around 33 to 34% it is defense, 50% it is railways, and mining and construction activity. The balance part is there. It keeps on changing depending on the order inflow which BEML gets. The last 4-5 years, it has been the top line has been sluggish, yes. And as I said, because they don't work for margins, they work just for catering to the needs. So, eventually the government will step out of all the businesses which they are holding. In next 10 years, 15 years, you will see all the government businesses are getting privatized. And that should be the case. Government job is governance, not managing businesses. And the facilities, the capabilities which they have, and the competitive edge which should be there, the innovation, the new products, and the competitive edge, that is not being utilized right now. It's more of a status quo. Chalta hai kind of environment which is happening as of now. So this private strategic partner, whoever will come, will definitely come with a mindset that they are going to eventually take control of the company. Otherwise, they won't be investing into companies like BEML. It's into highly sophisticated kind of a capital intensive kind of industry which it is into. So the player who will be coming with the know-how and expertise. So by technological edge should be there. So my own sense is that it's a right move, right beginning to begin with, and it's a long-term play. It won't happen overnight. I mean, it will take 5 to 10 years of its own sweet time for this to materialize into the type of company should be, looking at this global peers in US and European counterparts.
Okay, Shahina, you said numbers were sluggish, so on a standalone basis, even if you're looking at what's happened, this 26% stake, because this thing that we've seen earlier also with the case of Hindustan Zinc, government is not ready to sell the balance yet. So, and even on BML, there have been a lot of flip-flops. First they said we will sell, then they said we will not sell. Again, they're saying we're looking to sell 26%. So what should an investor do? How should he take these signals for BML?
Well, I think what I like about this policy of divesting 26% is, yes, maybe it will remain strategic investment for the investor and not get complete control. But I think there is a slight shift in the government policy for defense production. We hear that they are going to set up 2 corridors specifically for defense. And as of now, while it's only been an idea that, you know, local companies will be given a preference in production, I think now it's going to be implemented as a policy. So when that policy comes, I think that will interest strategic investors to take a stake in BML so that they would qualify as domestic producers and then target the domestic defense market. So I think that is a positive where I think interest will come in to buy the government stake, because otherwise I think the government would have found it very difficult. But with this change in policy, I think there would be strategic investors.
Okay, let's leave aside this strategic decision. On a standalone basis, valuations at almost 30 times this year, 22 times next year. It's on the higher side for a defense company, and return ratios in single digit. Would that be of an interest? Would on that basis, how would you, on a standalone basis, except the news, how would you value BML?
No, on a standalone basis, it does not look worth an investment, because if you see, even the stock at close to 1,200 rupees is testing its lower bottom. So I think on that basis, it does not look too attractive. What looks attractive is that while if you say on a let us say EV by sales, it's about 1.5 times. If a new strategic investors can come in, increase the production and productivity of the assets, the current infrastructure, and improve the numbers. I think that is where the change is visible. That is why I would continue holding or advise to buy it at dips. But otherwise, if you look at it either technically or fundamentally on a standalone basis, without this move or without a strategic investor and improving the overall business prospects for the company, it looks very difficult.
Okay, so that's the view that's coming in on BML at this point of time. Obviously, if this move continues to, if this move does come in, then our guests do believe that, you know, there could be more potential traction that come in. Shahina does believe that, you know, the numbers do still remain sluggish. The second stock that we want to talk about is Tata Motors. Something definitely seems to be wrong. It's flat in trade, but it's trading at 52-week low. Nothing seems to be working for a company who you know, the valuation are one of the cheapest, not only in the auto space, in the entire Nifty. But there is something that's certainly not working or finding flavors among investors. So we are asking, the stock is trading at a 52-week low. Is it the right time to start accumulating Tata Motors? Shahina, your opening statement, 1 minute.
Yes, I personally have started accumulating Tata Motors in the recent past. That's a disclaimer. The reason I'm doing it is that it is on a low base, is one of the worst performers in the competing space. And if you look at, as you mentioned, in terms of earnings, I think it's going to be one of the best performers in terms of earnings, EPS growth. 30 to 50% is what analysts are talking about over the next 2 years. And I subscribe to that. So I think in terms of growth, there is potential. There are certain issues that may come about with sluggish sales in Europe, but I think it's a temporary phase with new launches in the electrical vehicle space by JLR. I think it's going to be a positive kicker. I think one can keep accumulating. The stock is not going anywhere in terms technically, you know, it's on a downtrend. So I would be accumulating at every dips and waiting for 2 to 3 years and waiting for the story to pan out. Okay,
Dharmesh, your opening statement, right time to accumulate Tata Motors?
Yeah, definitely, yes. If you look at the numbers, the sales numbers, even the domestic sales numbers, CV and PV sales which came for the month of February was quite heartening and encouraging. 30% kind of a growth was there. MSCV has been doing well, and Tata Motors is still the largest player in the MSCV segment in the domestic market. So somehow the stock price has been correcting very sharply, and the reasons are not known as of now, at least to my mind. I don't know why such a sharp correction is happening out there. JLR sales has been sluggish in the European regions, but activities have been picking up, and primarily because of the new launches which were scheduled, and they were phasing out the old models. So that was the reason why the JLR sales went for sluggish. Usually this is the trend when you are coming to a new launch kind of a figure, such thing happens. But I think the capex has been done. Now the operating leverage should kick into play, and with world economy on the mend, things should pick up. So right time to accumulate Tata Motors.
Okay, so both of our guests do believe that it's the right time to start accumulating. So we'll get on with the discussion. Dharmesh, I'll start with you only. The third quarter numbers, in fact, were very good for Tata Motors. JLR did well, and you know that you're saying that you don't know, but there seems to be something fundamentally wrong that none of us seem to be getting. Why, despite coming out with strong Q3 numbers, JLR sales decent, the counter is falling? What, according to you, could be the primary reason why it's not finding so much interest?
See, even the standalone numbers, if you look at third quarter, was the first quarter when it turned into black on the PAT front. And the launches which are scheduled for new launches of F-Pace and the other variants of Land Rover, they are, most of the launches are marketed at countries like India.
Okay,
it's 30-35 lakhs kind of a bracket rather than 50 plus kind of like price tag kind of a bracket. So that again augurs well for Tata Motors. And what can go wrong, it's very difficult to find out.
What do you make of this Trump statements in terms of putting duties and all? Because I think he was quite vocal, and a lot of people took the indication that there could be more duties coming in for Jaguars that's exported to the US and all. So could that be a reason why again Tata Motors is looking weak? What did you make of this entire thing?
Maybe, because if you look at the way things are happening in US, so Trump is very clear. It's like make in US, make for US kind of environment which he is marketing at. So maybe, and 15-16% of the JLR sales is in US. That was the region where JLR sales was getting traction. And if this could be the figure, then Tata Motors become
Shahina, what seems to be the reason? Valuations low. Everything is in favor of Tata Motors, and every time everyone hopes that this is the bottom, and it just goes much below that.
Yeah, I mean, what I think is that the stock price to an extent follows what JLR reports in terms of numbers, because that is of course the major contributor both on the top line as well as on the EBITDA level. But here I think we've seen last 2 months they have faced sluggishness in sales, especially in Europe, because of the trade barriers that are being put up over there. And let's hope that US doesn't follow suit. That would be a negative. At the same time, what I believe is if they do, we'll have metal prices correcting sharply, because I think there will be surplus, let us say ferrous, non-ferrous, which would, instead of going to the US, come to other markets. So I think to some extent it will be offset. But I think that is the that is where the stock is finding some bit of difficulty in moving up because of JLR soft sales in Europe.
Okay, so I think the consensus view that we're getting on Tata Motors is the fact that our guests do believe that it's the right time to start accumulating Tata Motors at this point of time. Another stock which has actually left everyone confused is Bosch. Again, stock trading at a fresh 52-week low. It's expensive, no doubt, but the return ratio is much better than Tata Motors or the other stocks. But there seems to be something that the market is not liking. The third quarter numbers were not the best. Is it the right time to start accumulating Bosch? We'll ask our guests. Shahina, your 1 minute. Is this the right time to start accumulating Bosch?
No, I don't think so.
Okay.
I think both technically as well as fundamentally, I think the stock is not likely to give you a big up move from here in the medium term. So I would avoid getting in as of now. Maybe much lower levels I could look at. Here I think the major important problem is the valuations. I think at 4 times EV by EBITDA, at 4 times EV by sales, it's pretty expensive. And even on a EV by EBITDA basis at 25 times, I think the stock is pretty expensive. So I would really look at entering into this at much lower levels. The business fundamentally continues to be good. They are doing pretty well in, I think CV segment is doing well, and automotives, as you know, accounts for a large part of their revenues. So with the pickup in overall business in automotives, I think they should do better, but I would wait for lower levels.
Okay, you would wait for lower levels. Dharmesh, is it the right time to start accumulating Bosch?
No, I don't think so, because the valuations are stretched looking at the numbers, how they are panning out, and fourth quarter numbers will be further bad. If you look at a YOY basis, the same quarter last year was exceptionally good. Input prices have gone up, and Bosch is one company which has been unable to pass on the input prices to its customers. Right now, if you look at the products which they are highly priced products. So compared to competitors, if some product is being offered, Bosch is already a premium product in the market, and the efficiency and quality others are also offering at the same, lower price with the same quality. So that is not working well for Bosch. And if you look at last 4 years, top line has again been sluggish for Bosch. So they are unable to gain traction in the Indian market, where automotive industry has been picking up. So that would be a challenge for Bosch. My own sense is 30% kind of an EPS degrowth this year itself. So from that perspective, I do think further correction, 10-15% more correction should be there in the stock price.
Okay.
And maybe 15,000, 16,000 is the level where one should start acclimating. But because the company is good, but valuations looks stressed.
Okay, Vinit, welcome to the show. We're talking about Bosch now. The stock is trading at a fresh 52-week low. Do you think it's the right time to start accumulating Bosch?
Not really. I think if you see the business breakup, 87% is autos, 13% is the rest. And within that 87%, the bulk of it is towards injection systems. So with electric cars coming in, Bosch is going to find it very difficult to move business away from that segment, which is going to destruct very rapidly. So I think there is going to be a double whammy of not only earnings concern going forward, but also in terms of valuation multiple derating sharply as we go ahead.
Okay, so I think the consensus view that we are getting in from Bosch, from all our guests, that it's not the right time to start accumulating. So we'll throw it open for questioning. First of all, Vinit, in terms of this EV that you said, but Bosch has been very vocal in terms of that they want to go ahead. In fact, they're one of the first companies here that they say that they will cater to the EV market. Is that not a trigger for them going ahead?
So there are too many moving parts there. A lot of people are, the course is not clear how the market shares will pan out, what segments would Bosch operate in. And if you have seen lessons from NIIT, they try to remodel their business. But first the business goes down, the pie succumbs, and then you have newer additions of business come in. So if that were to play out, I think it will take some while, and undoubtedly the PE is expensive. So the challenges far precede the opportunity pie.
Okay, Dharmesh, PE obviously is expensive as it were, but don't most multinationals command a higher premium? That's what you've seen even in capital good like a Siemens or an ABB. Despite having such numbers, they continue to have that multiple. So doesn't Bosch get a MNC PE premium to it?
That was the precise reason why it was getting that premium, because the balance sheets are very clean, cash flows are intact. And the EV vehicle concept which Vinit was talking about, this is a challenge for everybody in the industry. It's not a new thing, and there is no niche player as of now. Everybody is trying to evolve, everybody is trying to evolve our technology, and Bosch has been a market leader in technological front. Only the problem has been their products are expensive compared to others. So others are coming out with the same product offering at a lower price, and India is a very price sensitive market. So here that becomes a challenge to sell premium products and charge premium for your quality if the same quality is available with others. So that segment, I mean, the pricing is what Bosch has to work on and gain further market traction, and that would still be a challenge, seeing the prior track record of Bosch. So that is the challenge to me.
Okay, Shahina, valuations, as you also pointed out, are expensive. What are the other concerns for Bosch, and probably what could change trajectory for them going ahead?
So taking the conversation ahead, as we see that the aftermarket for the diesel sets, that engine sets that they have been supplying to, I think that is the volumes and the sales are not really healthy. Like we've seen just a 4% in the last quarter. So I think this is a market where they will be hit because of their aggressive pricing. So I think overall, while revenue is going to remain a bit sluggish, profits are going to move up, but valuations remain expensive. So I would prefer entering at lower levels. I think the overall market size is going to shrink for the company.
Okay, so that's the view that's coming in on Bosch. Unlike Tata Motors, which our guests do believe it's the right time to start accumulating, Bosch, there could be potential downside. As per all our three guests, they do believe that valuations are expensive, financials are not showing, and there could be more competitive pressures going ahead. So another much more downside before they actually think that they should start accumulating Bosch. The final stock that we want to talk about is VMart. It's been a marked outperformer. Stock is trading at a fresh lifetime high. The question that we are asking our guests, the stock is at lifetime high. Can the rally continue for VMart going ahead? So Vinit, we'll start with you. Do you believe that the rally can continue for VMart?
Yes, I certainly do believe. So I come from a more macro picture where we are expecting the market size to grow 3x, and the GST impact is expected to wean away the unorganized sector systematically over a period of time. And in that distribution space, I think VMart, with its pricing which is sub GST, which does not attract, has been doing rather well. They've grown ahead of competition. They put up 10 stores till date, and they are opening another 35 more in this FY18 itself. So that will give them a jump going ahead, and they're approaching a cluster approach in Orissa, which should help them move faster. So I think valuations are not expensive in my opinion, given that the runway over the next few years is going to be very robust for the textile retail formats.
Okay. Shahina, do you believe that the rally can continue for VMart retail?
See, it's hitting new highs, and in terms of pure valuations, it's as expensive as some of the largest in the, I would compare the valuations with an Avenue. So I wouldn't call it a cheap valuation. At the same time, I think the rollout has been very fast. I think it's, they're targeting more than, I think, 170 odd stores to be operational in the near term. So I think to that extent, it is reflecting in the numbers. The numbers are like showing very big jump on a quarter by quarter basis. So I think over a period of time, it is possible that the valuations will justify the growth. I would keep a good stop loss at for this stock. I would term it as a slightly higher risk, higher return type of story, and I would keep my stop losses in place when I'm getting. I would continue holding the stock because it's hitting new highs, but I would keep a stop loss.
Okay, and Dharmesh, do you believe that the rally can continue for Bosch?
Yeah,
sorry, for VMart retail.
VMart, yeah, definitely yes. See, if you look at VMart, the business is primarily into garment segment. 80-90% of the sales comes from the garment for entire family, from kids to elder ones, and the segment geographies in which they operate is basically UP, Bihar, Odisha, which is a very price sensitive kind of a segment. Average selling price is around 300 to 400 rupees per blended price if you look at the garment side. Balance kirana and the other stuff is only 15-16% of the total sales. They have been very aggressive in opening up stores. 167 stores have already been opened, and operating leverage is now kicking in. All the economic factors which we are talking about for the country, be it per capita income and 7th pay question, everything seems to be showing the result of VMart. And if you look at the promoter, they have started as a small businessman in Cuttack. Shriman Srimati was the kind of store they have opened, and they are utilizing that. I do think valuation wise it is half of what Avenue Supermarts is, so a lot of traction to be there.
Okay, so the consensus view that we are getting from VMart is that our guests do believe that the rally will continue. But Dharmesh, as you pointed out, it's trading at half the valuation of DMart. What's the rationale that they are doing margins which are so much superior than the other retailers?
See, the very fact that they are into the garment segment, so that is the reason why they are getting a margin of 8-9% kind of a margin which is there. And it's a price sensitive kind of a segment, but they have been able to capitalize garments. So in the type of, if you look at the type of products are there offering a trendy kind of a product, which is liked by the people in those regions which they are there. So the sensitivity, the customer sensitivity is known to the promoters, and they are catering well to that. DMart, Avenue Supermarts on the other is more of a grocery general kind of a supermarket rather than the garment segment. So that is one reason why margins are there. My own sense is that profitability will multiply 3 times in next 2 years for VMart. So at 40-45 times P multiple on a trailing basis is still very cheap.
Would you Vinit, advise someone to, if they want to have DMart or VMart, which would be a better choice if someone wants to invest now?
See, I think between DMart and VMart, I think VMart is a play.
Okay.
One purely a few things is that private labels are very high, so they get good margins. Number one. 2 is the fact that their price range is between 250 and 400. In fact, if I remember correctly, it's around 250 average selling price. Returns is not very high. And turnover is very rapid, and so we have, as I told you, 3 things panning out. One is the taking out of the unorganized sector. One, you are setting up malls, so economies of scale are picking in, and promotional expenses are coming down. So all this operating leverage kicking in, new stores opening up, I think that's going to play out in a multiple way.
Okay, and Shahina, finally, VMart or DMart, which would be a better choice?
I would prefer DMart, because when I'm talking of valuations in comparison with Avenue and VMart, I'm talking of EV by turnover. Okay. So if EV by turnover for VMart is around, it's closer to 5, it's little less, and Avenue is more than 5. It's 5.7, or I'm talking of current years, right? So I think if I was to pick up between the two in terms of price performance, in terms of of the way the stocks have rallied, in terms of the business, I would prefer a DMart, Avenue Supermart.
Avenue Supermart. Okay, that's the sense that we are getting. But the general trend is that, you know, at this point of time, VMart's rally probably will continue. With that, it's a wrap on today's Hot Money. Shahina, Dharmesh and Vinit, thank you so much for joining me on the show. Ask BQ comes up next. Stay tuned to Bloomberg Quint.